The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, as we were probably expecting, we had a big reaction to Mr. Bernanke's comments, whatever they were. I couldn't understand it. I understood him better than I did Bernstein or Greenspan, but they talk in a different language than I'm affiliated with. Anyway, the first chart that I put into Tiger TV comes from a good friend of ours way down under in Australia. Graham Corbishley. He's a hedge fund manager, and had the pleasure of training him many years ago. But the chart that's in here shows the chart of the New Zealand dollar as how it relates to the Dow Jones Industrial Average. It's the Dow Jones Industrial Average, and you'll see the New Zealand dollar over it. But the thing that's important about this, it shows that 1, 2, 3, 4, 5 expanding triangle that we've been talking about in the stock market for the past several weeks. It's certainly started to work in the direction that it's supposed to do, and we will see what will happen. But it gives an idea of what's what the potential is here if this pattern is going to be correct. It works quite a bit of the time, but it doesn't work all the time. That's the main thing. Now, the thing that we should focus on today is commodities, and we'll start out with the cash. And that is, it's the dollar versus the euro, and that's the main thing. We were looking at that at the 134 level, and it's it's completed down to the already dropped $2,500 in just a matter of a few hours, and so it tells us that we are probably going to go a great deal lower. Now, if this is a true Gartley in the euro that we're looking at here, we have a potential in this to, and remember, this took well over 2 months to form this, and that would give us a price objective of 124 in the euro. That's what we'd be looking at. That would be the ABCD pattern that would go down to the 124 level. That's the main thing that we would be seeing if we did that. And believe me, this euro trades as well as anything I've ever seen in all of my years of trading. So, when it fails, it fails. When it works, it works. That's the bottom line. Okay, let's get to the commodities. And we've got one that's in big trouble, folks, and that's our gold market. We have been talking about this one for quite some time. The fact that it had been quite bearish. And, we are, we're at a major spot that I believe that we talked about yesterday. I'm going to blow it up so we can see it quite a bit because we're right down here. But the problem is on this particular pattern that I'm going to post into Tiger TV right now is the long-ranging bar that we had yesterday. Folks, this thing dropped, well over $70 from high to low, and that means that it's a situation where it could easily go down and complete the much larger pattern down at the 1.618 move, which would be down at the 1247 level. We are at major support right now at the 1282. There's no question about that because it hit there. We had a little bit of a bounce. I mean, $8, $10, but that's nothing in gold anymore. So it's telling us this market is extremely bearish. Even if it gets a rally, it's bearish. Basil brought this out on his show. I'm seeing it also. It's been telling us for quite some time that it's bearish, and we really need to pay attention to it. You don't have to be a hero to try to pick a bottom in here. Just wait. It's going to give you a chance to buy gold, down the road, when you're ready. But right now, it's just not. It just doesn't look like it's in the cards. We have just to give you an example of how bearish gold is. I'm just going to bring up the weekly chart and let you see that, because that shows that we could be looking at $1,170 an ounce in gold without any trouble. And all that would be is the 61% retracement coming off the low from October of 2008. And with this wide-ranging, bar that we had yesterday, why can't we make it there? I mean, I don't see any reason why not. We might hold this level, and we might hold it for a few days or a few weeks. But what it means to me is that we are heading, to much lower prices. And believe me, I liked gold when it was, at 1365 before we got the rally up to, the 1425 level. But once we went back below 1365 again, it was telegraphing that, gee, this thing's not looking good. And then, of course, when we went below the lows that we made in April, which are at 1332, that told us more about it. Now, the 1332 level will now become a resistance in gold if we do get a rally. And believe me, with gold as active as it is, we can get monster rallies in gold at any particular time. But the overall, it looks like we're going to go, a great deal lower. One of the things that we watched over the past weeks here on TFNN was the gold and silver index. And just to give you an example, I'm going to put up the weekly chart of the gold and silver index, and you'll see that we have shattered the 786 level once again, and we are heading towards at least another 10% drop in the gold and silver index is what it looks like to me. I don't see any reason why it's not going to make that, because with the wide-ranging bars that we're having, this is something that we have to, always respect. That's, that's the bottom line. And if we miss a bottom here, if some reason it stops at some, level that we're not accustomed to seeing, then we will be able to get a chance to get in it. They don't leave us behind too often. They will leave us behind occasionally, but not too much. But we know something for sure. The U.S. dollar has made a major turn from that 80 level. We double topped at 85. We came down to 80, which was about a 5.5% correction. And now, we're screaming back, very, very quickly. And if this is correct, we'll be looking at the U.S. dollar taking out 85, and the potential for the euro, if this Gartley, as long as we don't get above 134 again, the potential in the euro is to go to 124. That's the longer term, thing that we're looking at here. I'm going to switch gears here for just a minute, because we have some things happening in the stock market that need our attention. We talked about the VIX index and this pattern that we've been seeing for quite some time, this 135 pattern that has been occurring. Let me get the chart lined up perfectly so we can see it, and then I will post it into Tiger TV, and you'll get a chance to look at it, because the price objective of this Gartley that we have in the VIX index right now is at the 20 level, and I believe Basil has talked about that several times, and I think that we still have we got a little ways to go here, and I'm not 100% sure that we're not going to do it right away, but it looks like we've got a pretty good chance. We have some things happening with the S&P that we need to cover, and that is that we had that major Gartley form yesterday. We brought that up. The fact that the June could not exceed the June exceeded the highs of the previous move, making the ABCD, but in fact that we could not do it in the nearby, which was the September. That's the one that it's the most actively traded now. But since we have taken out the low of the last several weeks, and we're very close to a 61% retracement down there at the 1590 level, I'm gonna take a little gamble here, guys. I'm gonna walk out on a limb with my chainsaw, and I'm going to say that if we close below 1590 in this September S&P futures by Friday, if we close below there on Friday, we are going to see a challenge of 1,500 on the S&P very, very quickly. Now, if you're a person that bought in May or sold in May and went away, you're looking pretty good right now because the New York Stock Exchange Index is now trading below the May lows, and that means that everybody bought during the month of May is now setting with a loss. And not only is it below the lows of May, it's substantially below the lows of May, and that's the main thing that we're looking at. That shows this. I'm going to show this because it shows that same reverse point wave pattern that we've been watching for some time. And you're going to see a gap on here, and that's mainly because it doesn't trade overnight. But we have shattered the lows of the last few weeks, and it really is it's getting very negative. Basil has been saying to us on his show, and I listen to it because I get prepared for mine, that he was saying things that were really troublesome to him, and to tighten up the stops and, be really careful. And that's true. That's what you should have been doing. But now that we've gone below the May lows, this is a very negative thing. We have actually, with the New York Stock Exchange Index, you're not going to believe this, but we've actually made a 61% retracement from the February lows. We came right in at that spot where it made a low down there around 8,700, and then we rallied all the way up. And today's low was actually, we're trading below it now, but we went below that level, and that's telling us that the market, is extremely bearish. That doesn't mean that we're going to, see the thing go straight down. I don't know if we will or not. We have a huge gap today in that New York Stock Exchange Index, and folks, if that isn't filled, we're looking at some real serious ramifications here to the downside. Frankly, folks, like I said, a long time ago, this is as bearish as I've ever seen it. I don't know if it's going to work, but at least it started in the right direction, and that's a good thing, at least if you're short. And we'll see if it works this way. But these charts have been so bearish all across the globe. The DAX, every FTSE, the French market, Nikkei, the Chinese market. I mean, all of them have been bearish, and now the market is starting to look to that point. And also the bond market is, it's got pneumonia. It's a question of whether the antibiotics that they're going to give it is going to keep it alive here a little bit longer. But we're in bear markets in bonds. I believe we're in bear markets in stocks. We're in bear markets in gold. I believe we've started a bear market in crude oil because we stayed above. We got to take a little break here. We'll come back and do the crude oil.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're back, and we're going to take a look at crude oil now because I guess I have to wait till the music stops playing. I'm not sure. Okay, we're going to take a look at crude oil now. I posted that into Tiger TV on a daily basis, the crude oil, and we did have the breakout above the $97 per barrel level. We stayed up above there for 3 days, and it looks like what's happened is that we have a false breakout because we've came down and we've gone below those levels that we had. We took out the high from February. We took out the high from April. And if this was really good, it should have literally taken off and gone up to at least 101 or so. We got to 99 right into the Fed report, but it was acting so quietly. I mean, it just barely could go up. Making new higher highs each day. We've got a call from Vince in New Jersey. Are you there, Vince?
I am, Larry. How are you?
I'm good. What can I do for you, my friend?
Well, I just want to tell you, as usual, you called it right, but there's one thing I wanted to go back with you. Before I got the stroke, a little more than 2 years ago, everyone was singing the praises of China. And you were saying you doubted it, and you mentioned a few reasons why you felt that way, and it turns out you were right. And I just want to tell you that you were right again, and I appreciate it.
Well, thank you, Vince. All I was basically doing was, looking at the charts. And, they were telling us that everything was great in China, yet the stock market was going down, and every time that it rallied, it made a lower high. And every time it went down, it made a lower low, and that's a definition of a trend. And that's basically all I was doing. I have a strong distrust of the people in the economic community and also the government, when they give us these reports. It started when they started telling us that inflation stopped, back in 1991. I mean, anybody that's been to the supermarket recently can certainly tell you that, the price of food and stuff certainly hasn't gone down. The price of houses went down for a little while, and now they're coming back. But anyway, Vince, I wanted to thank you for the kind words. You've been a great supporter of me and of TFNN, and we certainly appreciate it, and we hope you're feeling better.
Well, I think I'm coming back. I've had about maybe 2 fairly good weeks. So maybe the Lord has said, well, he paid his due now. Let me straighten him out a little bit. So we'll see,
That's good. Well, you be sure to call in again, okay?
I will, Larry.
Okay.
Thanks again.
You bet. Thanks a lot. Since we're on the Chinese market with Vince, what we'll do here, I wanted to switch over. I want to finish the crude oil, then we'll look at that a little bit later. But I wanted to show the pattern that we had happening yesterday when the Fed was talking. We had a really beautiful, on the 15-minute chart, we had a beautiful Gartley pattern forming exactly $99 a barrel. And it proceeded to drop well over $4,000 over the next 14 hours. So butterfly patterns don't work all the time, but when you see them and you're watching for them, the fact that it went up there so perfectly and it wasn't crazy, there was no wide-ranging bars or anything. It was really a nice place, to look to, to be short. And now, we're trading at around $95 a barrel in the crude oil, and that tells us, that we're probably going to, go a little bit lower. And since we're on crude, we need to look at the gasoline futures because, we watch those all the time also, and you're going to see something that I think you'll get a really good interest in and we've talked about it many times, and that is you're going to see the same pattern that I've been talking about, and that's that reverse point wave pattern. It's the 1, 2, 3, 4, 5 pattern, and you'll see that it makes a 3-drive pattern up at the high at $3.25 a gallon, and after that happens, it breaks all the way down to $2.70 a gallon, and that's what's been happening. And we've had very small rally in gasoline, considering that crude oil went all the way back to the 61% retracement on the long-term charts, and gasoline could just barely make the 382 retracement. So, gasoline is beginning to look quite suspect now. We're going to be under $3 a gallon here in Tucson probably within the next couple of days because we were at $3.07 a gallon yesterday. So that means with the prices coming down now, they'll probably filter down to the pump. We've got to take a break here, folks. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I wanted to bring up a chart of the gold and silver combined so that you can see the bearishness that we're looking at. However, we do have something here that we talked about on yesterday's show that is a possibility, and that is this is an hourly chart that I'm posting here in the silver and gold, and it goes back over several months. And so when I put this in here, you'll see that the red line is the 60-minute chart for gold, and the chart pattern itself is the picture for silver. And we have a cycle, and this is nothing more than a nominal cycle. In other words, a cycle that'll work over one or two iterations, and then it expands and contracts by the Fibonacci numbers. But when it lines up with price and it lines up with the cycle, it's worthy of taking a look at it. So on Monday's show, we're going to try to find a place here where we might get a scalp trade on the short side, on the long side of either gold or silver. And believe me, that will be a scalp trade because these markets are going lower. If we take a look at silver on the longer-term basis, you're going to see that we have shattered just about every double bottom, triple bottom, anything that we had here has been a total disaster, and we are going lower. We're in deflation in these metals, and there's no other way you can say that. That's it's just incredibly bearish. And so we want to put this into Tiger TV so you folks can see it, and it shows the bearishness that we have on silver. The only good part that I can see, and this is the bottom that might occur, another 50 cents lower. And we'll be watching the open interest and the volume here, because if we get a record volume here and open interest pops its head, then we got something to look at. Because you remember when it was making its high in April of 2011, up at that $49 per ounce level, we were seeing huge changes in open interest and volume. And if we start seeing these again near the bottom, that's telling us that we're going to be at a significant bottom in this, at this around the $19.40 level in silver, which would be equivalent to somewhere around $12.74 per ounce in the gold, would be my guess. Because that cycle is there, and we want to be able to watch it for some type of a bottom to actually occur. But frankly, I don't think we're going to see very much. I think we might get a little bit, but these markets are bearish, folks. I keep saying how bearish I am, and nobody believes me. But I'm as bearish as a witch in a broom factory. That's about as bearish as I can get. So we'll see how it ends up, before we're all done with all this. Okay, we need to switch over here for a second, and we got so many things happening. I'll tell you, yesterday I tried to have Rich Anderson on the show today, and I called him last night at home, and I said, Rich, can you come on to the show today? And it was already I think it was 8:30 in Minneapolis, and he laughed and he says, "Are you kidding me?" He said, "I've been at this for 18 hours." He said, "I'm just winding up," and he said, "I got to start in another 6 hours." He said, "So let's do it another time." And I know the feeling, because I put in a lot of hours yesterday, watching things, because we wanted to see if these levels were going to go to where they were supposed to, but they did move. And believe me, folks, it wasn't what Bernanke said or any of that stuff. There was a cycle there. I don't know what it was, but there was a cycle there that made the thing turn. It could have been that the Bradley model that we looked at on June 1st has finally kicked in big time. We don't know. All I know is we broke all those major supports, and we broke them very fast. We broke them in 2 days, and that's a very, very negative sign any way you look at it. And we will we'll see if the markets move lower, like we're looking at that. But I don't think that what Bernanke said, was real. I listened to him, but frankly, I couldn't understand him. I understand him better than I did Greenspan, but frankly, it's they all talk in economic stuff, which I don't quite understand. The thing that I understand the most about economics, when prices are going up, there's more buyers, and when prices are going down, there's more sellers. When I was in graduate school at the University of Indiana, we had a guest speaker named Paul Samuelson, who was a Pulitzer Prize author, and also he had won a Nobel Prize in economics. And he told our MBA class, he said, "Kids," he said, "you will learn more about going short a contract of soybeans than you will in 2 years of graduate school." And he expounded on that a little bit. He said, "This will teach you about risk and reward." He said, "It'll teach you about how to make money, and it'll teach you how to lose money. But more importantly," he says, "it'll teach you about yourself." And he said, "That's the thing that will keep you moving forward in your career." So I always remembered that. I was already trading at the time, so we'll see if that's it. Someone just said that Paul Samuelson was Larry Summers' uncle. I find that hard to believe that Summers is in that type of DNA chain because I don't think Summers is the sharpest knife in the drawer. That's just my guess. Evidently, it's true that Paul Samuelson, his nephew, is Larry Summers, who was the Secretary of the Treasury and then was president of Harvard for a while, and also a good friend of Robert Rubin and also Mr. Greenspan, and they were the instruments of this problem that we had known as the meltdown. But we'll see. Now we need to talk about corn, because we've had a nice move in corn. We were expecting it to come out of this bottom that we had Sunday night at the 532 level, 525 level, and we've had a just about a $3,000 move in corn in a matter of a few days, much like we did last June. Remember last June we bottomed on June 14th with that ABCD pattern that we've had in Tiger TV, and then on the 16th of June this year we were making a head and shoulders pattern at a bottom, and the market has come out of there pretty good. Now, after we had the bottom in 2012 in June, the market ran up very, very quickly and then backed off for 4 days. And so what we're looking at now is to watch if we get a pullback in corn. Anything around 30 cents a bushel down, which near the 61% retracement, which I think would be a very good buying opportunity. That would come in around the 547 level. That's what we would be looking at for a potential buy in the corn, because it's come out of here so strongly, which we were glad to see, and it's told us that this potential cycle that we're looking at is correct. So what we're watching for is the next possible spot to look at it. So we'll be watching that as we go through the weeks and days that we have the market going through here. I've got a request here to to talk about Apple, because we talked about it yesterday, about the pattern that was happening in Apple. The price objective has not changed. We're still looking at Apple around the $4.15 per share level. You'll notice that if you come into Tiger TV, you're going to see the ABCD pattern that's forming there, and it will be a Gartley pattern, and you don't have to risk very much at that time. And what's good about it is it'll be taking out the lows from May, because that's what you really need to do. The people that bought then will have a loss, and then you'll be able to buy it at a very cheap price, $4.15, and you wouldn't have to risk more than, I would think, $12 a share would be the maximum that I risk. So the way I figure that out is because I look at the value of the contract and then I multiply it times 3%. And 3% of 400, roughly $12 a share, and that will give you a pretty good idea of what we're looking for. That number comes from a statistical number that was given to me by Jim Twentyman, and that was the fact that if you're risking 3% on anything that you're looking at, he said you're going to have to be wrong 33 times in a row to be out of business. And, we're wrong a lot, but, we're not wrong 33 times in a row. So if you use that as stop protection, you'll be able to use it, because if it doesn't stop there, it can go all the way down to 402 a share, which would be the 786 retracement. And if we should take out the 384 level in Apple, look out. They're going to turn the lights out up there in Appleville. And, they won't turn the lights out. The earnings will just probably be, a little bit tough. That would be my suggestion anyway. We will watch this here at this point. The Treasury bonds. Let's move on to Treasury bonds, because we have had a tremendous move down in bonds. I'm going to start with the weekly chart, because that's going to show us, the negativity. The negativity that we have here in these bonds. The fact that we've mentioned this head and shoulders pattern quite a few times over the past weeks here. It was a perfect head and shoulders pattern that started in 2011. Then we made the high up at point D, which the big ABCD completed on the long-term weekly. Then we made our right shoulder about 10 weeks ago when we were up at the 61% retracement, and now what we're looking at is we're ready to take out the lows from 2012, and that means that the rates are probably getting to go above 4% in the 30-year Treasury bond. And with the looking at the notes themselves, notes are even telling us that rates are going higher. And notes are the ones that determine the credit card rates that you pay, and then also your loans on your car, and then also your mortgages. So these are the things, that's what it's doing. So we will find out, what the next move will be. but there is there'll be an ABCD pattern forming about 5 points lower in the bonds, which will get the bonds above the 4% yield, and that will make major because when we go below 2012 lows, that's going to really light up some lights somewhere, because that's the first time that's happened in quite a few years. We've always made, the interest rates have been going down for 33 years, and this will be the first time that we have actually taken out a yearly low, and we're doing it very, very quickly with a very, very negative pattern. So we need to watch that very, very closely. Okay, that takes care of the bonds. Now I wanted to take a quick second here and take a look at the Treasury notes, because they are just as important, and they're much higher as far as the volatility and stuff that we have. We're going to do the weekly chart on the notes, because it also had a beautiful head and shoulders pattern there. If I can get it to line up correctly, that's about the same. And now we're looking for the notes to come down a substantial amount here, another 2 or 3 points, when we will finish a ABCD pattern and a 61% retracement of the larger move. So in another, I would say 2 or 3 weeks, we should be ready for a bounce in the long-term notes, but that will come only with a little bit of time coming in. We're having, we've mentioned this many times before on in the markets about what's happening in one particular commodity that we talk about all the time. But we've got to talk about it again, because it's beginning to look like like it's really terrible. Now there's a bad tick in here that I don't have any control over. It comes from E-Signal, but the price of the S&P on the right side of this chart is not correct. It's just for the last day it's not correct. The rest of it is correct, but you can see we have now matched the lows that we made last April in copper at 306. And once we get below 302, we'll be looking at 275 in copper. And this correlation that we've had between the stock market and the copper market has been telling us all along that there's been something wrong in stocks. And I think that's not only it's telling us that now, it is actually screaming to us now. So that's what I see occurring at this particular time. So this is a very important thing that's happening in these commodity markets, especially gold, silver, and in the copper. They're giving up. If things were good, people would be buying copper to build the phones and the buildings and the automobiles and everything else, and there's huge stockpiles of copper, and copper stocks are getting hammered badly, just like the gold and silver mining stocks are getting bad. Deflation is here. I know it's Bernanke's worst nightmare, but he's going to have to look at it, because if this continues, we're going to be looking at something at least as sinister as what we had in 2007, and we all know what happened there. And of course, this time I'm not sure there's going to be a too big to fail bank. I think that the public is a little fed up with that, because when they try to get their loans, the banks now are tightening up on everything, and they're not being the nice guys that they were before. And the public will remember that, and they will let their congressman know. Not that the congressman will necessarily do something about it, but I think they'll let them know that that's it. Okay, we got to take a break here. 877-927-6648. Wow.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we have a caller from Las Vegas, Nevada. Evidently, the slot machines have been pretty good to him this morning, so he's got time to call. Gary, are you there?
Yes. Yes.
What can I do for you, my friend?
Well, my question was about oil. I tried to trade off of the symbol. I don't do futures. I trade off the symbol USO
Yes.
relation to WTI. But I trade SCO and UCO. My question is this. I'm looking for a major turn. You know, gold made a major turn down, lumber made a major turn down, copper made a major turn down, and oil refused. And you know what I'm saying? It just went sideways, back and forth, and then almost broke out above 97, 98. So
Right.
I wanted you to go into the weeds a little bit more on oil.
Okay, I think I covered that a little bit earlier. Crude oil, broke above the $97 a barrel level and stayed there for 3 days, and then in a matter of a few hours gave 5% of its value back, and that tells us that was most probably a false breakout. And so I think oil. If you remember back in 2007, oil was $143 a barrel, and it went down to $30 a barrel, and it started a little bit later than the rest of the commodities. So just because oil holds up a little bit more, I still think the trend is down. If you look at that USO chart that I put into the Tiger Den, it's had lower tops for the past several years. I mean, you're going back to 2011. This thing is just a whole series of lower tops, especially since 2012. So you're certainly trading in the direction of the trend that, it should be going lower.
Okay. All right.
I hope that helps.
Thanks very much.
Well, thank you, Gary, and stay away from the tables, my friend. Okay. Well, most people that live in Las Vegas don't gamble, or very few. Okay, folks. I put in the Bradley model for the Dow Jones Industrial Average. I posted that into Tiger TV, and then right behind that, I posted the long-term monthly chart of the Dow Jones, showing again that 1, 2, 3, 4, 5 reverse point wave. That was a T6 pattern, expanding triangle in Gartley's book, and it's one of the more accurate patterns. It has a probability of winning better than 85% of the time. And when it does win, it wins, at a very good percent win versus the amount of money that you're risking. So that's what we're looking at, and that's why my bearishness has been there. And we see this everywhere. It's not just here. It's in the DAX and the European stocks. And Europe has been in a recession for a long time, yet stocks have gone higher over there, but that doesn't mean anything because, the stock market is not the economy. It's a market of stocks, and it can do whatever it wants. It's on a totally different cycle than what economic stuff that we're looking at. So the overall, we just look very bearish here. Friday's going to be a really key time because I'll mention this another time. If we close below 1590 in the the September S&P futures, that would be closing below 14,820, I believe, in the Dow Jones Industrial Average. If we close below there on Friday, you're going to see a very, very strong downdraft come next week because this came very, very quickly. It caught a lot of people by surprise. They'll be doing their work over the weekend, the hedge funds and the people that don't have any skin in the game other than other people's money, and when they realize that they could be looking at something rather sinister, they will make it tough. Live every day in an attitude of gratitude, and may God bless.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.